Hi everyone, hope you guys are all having a great day today. And before I start the video, because by the time I drop this video, it's going to be Christmas, I want to say Merry Christmas everyone, God bless. Hope you guys are all having a blessed week. Thanks again for always supporting, I do appreciate it, and thanks for watching. In this video, I'm going to go over BlackBerry Stock, to go over the Q3 earnings numbers, plus the conference call in terms of the key points that I found beneficial, not beneficial, but the key points overall. Share my opinions, go over a little bit of technicals because, for example, some of the things, and overall the movement of the stock. We closed at $3.96. which if you look at the past 52 weeks, the highest we went was 385 in the past 52 weeks. So we've hit decent milestones and passed some decent moving averages. And the volume is increasing, but it's still relatively low. And I'm going to share why later on in terms of this video. But first, I'm going to go over the numbers. I will say it might be a little bit dry potentially, but with the opinions base, it should be good. And then in terms of the conference call as well, that's going to be pretty good. And then technicals, all of that stuff. So hopefully you guys do enjoy the video. If you do like it towards the end, consider dropping a like. It does help the channel, so thank you much for that. And then also be mindful that Q4 earnings estimated time frame though is April 2nd, 2025. So again, that's Q4. I would say it was pretty beneficial really before because we were expecting to be cash flow or profitable by Q4, but they ended up beating their target and being profitable during Q3, which is pretty awesome. But it's still important to know when the Q4 is coming up, obviously, right? Now, in terms of Q3, I do have a replay / it was a live stream. Highly encourage you to rewatch it because I'm basically sharing what the key points I thought were during the conference call. I might have missed something or misinterpreted something, so I highly encourage you to rewatch that to do so, just because if you do own shares in a company, you want to know the most you can about the company overall, right? So that is beneficial. Should pop up right about here. Now, this was reported on December 19th, 2024. BlackBerry reports third quarter fiscal year 2025 results, beats top end of revenue guidance range for the both cybersecurity and IoT division, raises bottom end of the full year guidance range for IoT, delivers positive adjusted EBITDA and adjusted EPS above guidance range. GAAP basic earnings per share improves both sequential and year over year. One thing to note also, the stock did drop a little bit, I believe, when they did report this earnings a little bit or something. It wasn't a big spike or anything like that. And then pre-market the day before it started actually going up, pre-market it did dip a little bit. And I'm going to share my opinion as to why, but ultimately it's still fine. It's not a big deal because we do have, like, for example, I shared in 3 videos ago, I believe, or something like that, that BlackRock bought about 5.2% of the shares of BlackBerry stock. So there is interest in that. Plus we see analysts picking up interest, upgrades, all that stuff. So it's not bad. It's just my opinion as to why I think we saw a little bit of a dip, right? It wasn't necessarily a dip, but it wasn't going as high as we would expect to be for a company that just became profitable again, right? So that's pretty awesome stuff. But either way, achieves a milestone of positive operating and free cash flow ahead of schedule. Now, BlackBerry achieved a significant inflection in its results this past quarter, driven by a combination of strong revenue performance for both our cybersecurity and IoT division and continued focus on costs and efficiency. The company delivered stronger than expected profitability and a return to positive cash flow ahead of schedule. Again, they were expecting Q4. They got it in Q3, which is pretty awesome, which to me speaks volumes for this new management team. They've only been running this company for basically a year, and within that time frame became cash flow positive, so returned back to profitability, raised a little bit of money too as well, and also has sold Silence essentially within a year, right? It's going to be closing in by Q4. They have a definitive agreement within the conference call. A little bit jumping the gun here, but they're moving pretty fast. I think this team's pretty awesome. They're doing a great job. And in my opinion, again, I do own shares in the company, so be aware that while you're watching this video, and I'm just sharing my opinion, so please do own due diligence and research before buying and selling, not a professional. But I think essentially the trajectory for the company is just moving up for the most part. Obviously, there will be down days, right? Obviously, like with every stock, but essentially the trajectory is to the upside now, in my opinion, especially since they've finally became profitable, right? From that statement that I read, that was from John Giamatteo, CEO of BlackBerry. The announcement of a definitive agreement for the sale of Silence to Arctic Wolf is a further transformational step for the company, placing BlackBerry on a path to accelerating profitability post-close. And he also mentioned it here, right? Now, as for the numbers, so for Q3, total company revenue came in at 162, which is pretty awesome because if you remember the forecast, The street estimates was about 150, so they beat that with 162. Total company revenue expectations was between 146 to 154 million, so they beat that as well. So they passed the top end, beat street estimates, amazing stuff. Total company gross margin and non-GAAP gross margin was 74%. IoT revenue grew 13% sequentially and exceeded previously provided guidance at 62 million. IoT gross margin increased by 3% points from the prior quarter to 85%. So in terms of the guidance they provided was 56 to 60. They beat it with 62 million right there. And then there's a little bit of tidbits, some stuff. So for example, if we look at last year's Q4, right? So last year's Q3. So it's right about here, December 20th, 2023. They had 175 million, right? In terms of total company revenue. It is a year-over-year decrease, right? We have 162, but I believe they were not profitable, right? So the last time they were profitable when he shared it was, one sec, sorry, I went too far back, right about here. So the last time they were profitable, he stated in the conference call, was in Q3 of 2022. And this was 2023 Q3, so last year's Q3. And I believe they were in the negative 6 million. I'm going to show right about here. So yeah, $6 million of losses, right? They reported. So this quarter is different. Even though the revenue is less, right? 162 versus 175. The thing is though, this one's significantly better because they actually made money, right? It doesn't matter how much revenue you bring in. It matters of how much you keep at the end of the day, which is awesome. And it came in at, if I'm not mistaken, 19 million right about here. So 19 million. Let me make this a little bit smaller so that way everything is a little bit more visible, but the profit is about 19 million right about here. So that's good stuff versus $6 million of losses, even though the revenue came in higher last year, same quarter. And then the IoT was 55 million last year. This time around, it's 62 million, as we saw right about here on the top end, right about here, 62 million. So good stuff. Now for the IoT adjusted EBITDA increased 38% sequentially to 18 million. Cybersecurity revenue grew 7% sequentially and exceeded previously provided guidance at 93 million. And again, guidance was about somewhere between 86 to 90 million. So they did beat the high end too, right? And last year it was 114 million for cybersecurity, same time frame. So it is unfortunate. It is a decrease on the cybersecurity side, but things are shifting a little bit for the cybersecurity side because now it's becoming secured communications and silence is taken out, which kind of points to as to why initially, in terms of the day was reported earnings, like after earnings reported in the pre-market, there wasn't a specific spike because the forward outlook numbers that they gave was kind of on the low end. But I'm going to go over that soon. Now, in terms of cybersecurity gross margins, they increased by 12% points sequentially to 67%. Cybersecurity ARR increased by 1% sequentially to 281 million. Cybersecurity DB and RR increased by 2% points sequentially, increasing for the fifth consecutive quarter to 90%. Cybersecurity adjusted EBITDA increased 14 million sequentially to 8 million. Licensing revenue exceeded guidance at 7 million, and licensing adjusted EBITDA was 6 million. So that's good also for licensing. It's not necessarily big numbers, right? So guidance was 4 million previously, and they got it with 7 million. The benefit of this is essentially, hopefully it's reoccurring revenue with these licensing royalties that they're getting, and hopefully that number kind of climbs up over time. Nothing crazy though, but previously last year, same quarter, was 6 million, right? So a slight increase, which is pretty nice year over year. Non-GAAP net income was 12 million and GAAP net loss was 11 million. Non-GAAP basic earnings per share increased by 2 cents sequentially to 2 cents, beating previously provided guidance. GAAP basic loss per share improved by 1 cent sequentially to 2 cents. Total company adjusted EBITDA exceeded previously provided guidance at 23 million. And then total cash equivalent, short-term and long-term investment increased by 1 million sequentially to 266 million. Operating cash flow beat expectations and improved by 34 million year over year to 3 million. Just FYI, this does not include the cash coming in from the Silence deal, which is essentially it's selling Silence / being a partial partnership, which again with Arctic Wolf, roughly valued somewhere between $4 to $5 billion, which is pretty awesome, growing company in terms of cybersecurity. And BlackBerry will own about, if I'm not mistaken, 5.5 million shares. Roughly either 55 million or 5.5. I believe I still have it here somewhere. Yeah, 5.5 million. So it's pretty good. So essentially, give or take, sold / partnership with Arctic Wolf. Pretty awesome stuff, right? Now, before I get to the conference call and less of the dry stuff in terms of the numbers, sorry about that, I'm going to go over the key highlights. The key highlights are basically going over what previous press releases came out, and then the forward guidance, and then the conference call right after. So now, in terms of business highlights and strategic announcements, BlackBerry and Arctic Wolf announced that they have entered into a definitive agreement for Arctic Wolf to acquire BlackBerry Silence endpoint security assets. BlackBerry announces that QNX embedded technologies powered more than 255 million vehicles. This is right now, for the time being, it's not necessarily that important right now, but later on, this will be coming out because with QNX, they're evolving it to be more content focused in terms of subscription based or stuff like that, in terms of essentially more content per vehicle, which will drive it more revenue, right? And they're already doing that right now. It seems like it from what the Tim, CFO of BlackBerry is stating, which is pretty awesome stuff, because before it was just pretty much like one and done with these vehicles. So they are branching out, which is awesome. Hyundai Mobis selects BlackBerry QNX to power its next generation digital cockpit platform. And then BlackBerry QNX introduces software-defined functional safety platform in collaboration with Intel for industrial automation. And then by the way, the partnerships are pretty massive for BlackBerry. We got Intel, we got AMD, we got NVIDIA, we got a bunch of companies, Samsung, I believe, Google as well, Microsoft. That's why, like, personally, this company's undervalued, but obviously everybody wants to see the numbers. It's just like the CFO of BlackBerry, Tim. He stated in the last conference, not the conference, what was it? The one before the earnings, but I forgot what it was right now for the time being. I think it was the TD one. By the way, I have all these on my channel, replays of them. Highly encourage you to rewatch them. They are beneficial. They show insights as well further. But essentially, he said the company, where it stands in terms of share price and the market, is basically they want to be, it's like a show and tell kind of thing, like show us before we actually invest fully, right? But the company, I think, is doing well. But in terms of the management, it's a pretty promising future and good moves overall, and especially with a short period of time. Obviously, if you're a long-term investor, it does seem like it's still taking time. Personally, I am a long-term investor in the company, but right now within this time frame, it's a great price and all that stuff, and moving forward, right? So now BlackBerry Ad Hoc is in process for achieving FedRAMP high authorization. Once confirmed, Ad Hoc will be the first critical events management solution to be authorized to secure the U.S. government's most sensitive unclassified data. BlackBerry welcomes the government of Canada's investment in the Malaysia Cybersecurity Center of Excellence to enhance cyber resilience in Southeast Asia. And then BlackBerry appointed Lisa Bahash, an automotive OEM and Tier 1 supplier veteran, to its board of directors, which is pretty awesome because you obviously want to have those connections when it comes to the meetings in themselves and plus the deals, right? Now, in terms of the forecast, so this is, or the outlook, this is the reason why personally I thought it went down a little bit, or essentially did not spike up, regardless if they went to profitability, which was unfortunate, but obviously the backing of essentially the analysts and the upgrades that they provided, it just pretty much skyrocketed. And we've seen investments, like I stated, with BlackRock back in September, October, with 5.1, 5.2% of the shares being bought in terms of BlackBerry, right? So people are seeing the benefits, or not, the potential growth for BlackBerry, right? So now for Q4, they're expecting 126 to 135 million, which is on the low end, because if you look at last year's Q4, or well, it was this year's, but Q4 for fiscal year 2024, it was at 173 million, right? Now, the thing is, though, they stated basically because the silence revenue is no longer being mixed into this, right? Not necessarily that it's lower than the Q4 of last fiscal year, but more so for why it's on the lower end, right? The IoT revenue expected to be 60 to 65 million, which is kind of unfortunate as well, because the IoT revenue, I believe they did have the split during this time, was 66 million. So it basically just comes a little bit shy of it. I think they'll still beat it though. In my opinion, I think the way the company is moving, it probably will come in above, a little bit over 66 million, but don't quote me on that because I do own shares in the company and I'm obviously probably more biased towards the potential outcomes, you could say, right? So therefore, don't rely on it. But either way, 62 to 66 million for secured communication. So again, silence is removed from it. No longer necessarily cybersecurity in general, but it's more secure communications kind of category, right? That was 62 to 66 million. And last year, in terms of cybersecurity, was, well, this actually had to deal with it, but 92 million right about here. So again, not shy, but like quite substantially lower, right? But again, a big chunk has been taken out of it. And then licensing revenue, approximately 4 million. And then IoT segment EBITDA 8 to 10 million, security communications EBITDA 4 to 6 million, licensing segment EBITDA 3 million. And just in case you're curious about the licensing, how much it was last time, licensing came in at 15 million. So pretty significant drop actually, if you think about it, for Q4. So Q4 of fiscal year 2024 versus Q4 of fiscal year 2025, pretty decent drop with 11 million right there. But we'll see what happens. And then total company adjusted EBITDA 10 to 20 million, non-GAAP basic earnings per share 1 cent plus or minus, right? Now for full fiscal year guidance has been dropped. It wasn't just for the fact that it was a quarter, but obviously if the quarter was stronger, this number wouldn't be adjusted that drastically. Previously, the guidance that they provided for a full fiscal year was 500. So I'm just basically getting it from the previous quarter, by the way, Q2. That was reported on September 26, 2024. The guidance they provided for the full fiscal year was 591 to 616 million, and they dropped it pretty significantly, right? 517 to 526, pretty significant drop. And you can see it's predominantly on the cybersecurity side. So IoT revenue 230 to 235, that's not really changed much, 225 to 235, right? So essentially it actually got bumped up on the lower end, right? So 225 was on the lower end before, 230 on the lower end now. So it's a little bit of a bump up, that's good. And then the cybersecurity side, expecting, secured communications now, 267 to 271. Previously, it was 350 to 365. So that massive drop was predominantly basically silence, it looks like, for the most part. And then, not necessarily just silence, but in general, that division is pretty much getting lowered quite a bit. And then in terms of licensing revenue, approximately 20 million, IoT segment EBITDA 48 to 50 million, and then security communications EBITDA 43 to 45 million, and then licensing approximately 16 million. I believe it was pretty much the same last time. Yeah, 16 million, not much difference. And then total company adjusted EBITDA 60 to 70 million, so increased from plus or minus 10 million. And then non-GAAP basic earnings per share 2 cents or break even. And last time it was 5 cents to 2 cents. So we'll see how it happens, like how the company moves forward with Q4. It will be interesting to see, because right now, basically, without silence, we basically have to readjust our expectations. But here's the key thing. With the analyst upgrades, which is pretty awesome, and all that stuff, they're seeing what potentially, for example, BlackRock's seeing, other investors are seeing, and the fact that it's these quarters, for example, let me see. So last year's Q4, because I'm trying to figure out how to essentially say this correctly. Last year's Q4, even though the revenue was 173 versus what we're expecting, which is 126 to 135 million, right? This quarter for Q4, we're expecting profits. Last year's Q4, or not last year, but 2024, fiscal year 2024 Q4, even though they reported 173 million, so more than what they're expecting to report, they were reporting losses from what I remember. Now, obviously, they have 100% losses, but the question is how much. They reported $52 million in losses, quite substantial. So even though the revenue and the outlook is on the low end, it's still profitable. And again, like I stated before, you want to make profits, because if your revenue's, let's say, $1 billion, but you still lose $100 million, you'd rather potentially, I don't know, depends. I guess you could look at it two ways in terms of trajectory, because if it's like 1 billion this year and then next year's 2 billion and next year's 3 billion, well, the company's growing, but then you could essentially just cut costs at one point and be more efficient, because you're dumping so much into research and development that at one point you're expecting to slow down research and development because you're ahead of the game, and then you'll make profits. But at the same time, if you could make, like, say, 100 million versus $1 billion, and then have $100 million of profits, that's better than losing $100 million of profits, right? Or reporting $100 million losses. But it depends on how you take it and how far the numbers are and all that stuff, and the growth and et cetera, et cetera. But in my opinion, I'm seeing growth, I'm seeing profits. Again, it's still relatively, you could argue, slow, but it's still relatively fast for this new management team, given a year, in my opinion. Again, do own shares in the company, all that stuff, just sharing my opinion. So be mindful of that while you're watching this video. So there's that. Now, in terms of the forecast, all stuff, now to what they stated in the conference call, and then I'm going to go to the technicals. So I'm just going to move this here. So in terms of the conference call, basically stated that they came back to profitability in this quarter. Again, they stated that it was going to be Q4, but now they actually beat their target by getting out to Q3. Then positive free cash flow, first time since Q3 of 2022, which is pretty awesome. So they signed a definitive agreement for the sale of Cylance, subject to closing of conditions. Talked about a bunch of good design wins, like 2 leading OEM automakers, and basically saying QNX 8.0 is picking up really well, which is pretty awesome. Those 2 OEMs, I believe, one of them was in Germany, the other one was Japan, if I'm not mistaken. I apologize if I'm wrong, but they overseas OEM automakers, just FYI. And then also in terms of verticals, this quarter outside of automotive has been growing. So within this quarter, it has been growing. If you remember before, they wanted to make sure, like in terms of IoT, it's not just strictly focused on the automotive side. It could expand to, for example, the medical side, which we've seen before, industrial, all that stuff, et cetera, et cetera. So different verticals, which is awesome. So that we're not specifically dependent on automotive side. But Tim, CFO of BlackBerry, stated this again. He stated this for the past 6-8 months, I believe, give or take, where he's saying ultimately, even if automotive sales does slow down, that in the future will not impact us so much, because if we expand more on the content side, then we could see revenue coming in and basically creates a foundation. Like I've explained before, for example, if we sold 100, just arbitrary numbers, 100,000 vehicles before last year and let's say 50,000 vehicles this year. So 100,000 last year, 50,000 this year, then basically essentially have 150,000 vehicles out on the road that you're creating revenue from, versus before the older model of QNX, where it was like, yeah, you had 100,000 last time, but 50,000 this year, but revenue is really coming in from this year from 50,000 alone, right? Obviously, you would want more vehicles being produced, so that way that number grows, because even though you got the 150,000, so last year 100,000, this year 50,000, well, if it's 150,000 this year, so growing sales, then it helps you out because you have 250,000 total coming in, right? So there's that. Now, in terms of guidance for Q4, is lower due to Cylance revenue no longer coming into the due to the sale of Cylance, right? So no longer obviously revenue coming in from the sale. And then one thing to note, even with Cylance this quarter, BlackBerry got to profitability a quarter earlier than they targeted. And then personally, this new management team in just 1 year has done a great job. So this is all basically, I stated a bunch of times because I'm impressed how the company's moving, right? In terms of the management team, came in and started doing things quickly, right? Now we got cash in our hands, and now we're being asked, and like later on in the Q&A, what are you going to do with that cash, all that stuff, where before, like we were questioning if we have enough cash coming up like, at a certain point, because we kept on just basically losing money. So eating away at the cash available. And now we have cash in hand, which is pretty awesome. And cash on hand even before the sale of Cylance. So with Cylance sale, we got more cash coming in and all stuff. So great stuff. And by the way, I don't think I mentioned here, but BlackBerry seems to be saying that the Arctic Wolf company is they're a great team and they're working well with each other. So that's awesome. You always want to see that positivity, because not only is that company seems like they're doing a great job on their own, but a great partnership moving forward. It's always a good sign as we're moving forward working together, right? Now, in terms of Q&A, I could be wrong, but it looks like there was more than usual analyst questions this time around, which could be showing more of a positive interest coming into the stock. And you could somewhat see that with the upgrades that came in the next day after this earnings was released, because if I remember correctly, there was a quarter that I think almost 1 or 2 years back where there was only 2 questions asked during the earnings conference call. So the interest to me seems like it is building up, and I think it's given to the new management team progress within just a year of operating the business. Because I remember there was one quarter, I can't remember exactly which quarter it was, but it was like almost not non-existent questions, but there was like only 2 analyst questions. As opposed to this time around, there was a decent, like the conference call extended a pretty decent time frame, where before sometimes conference call would end in like 30 minutes. Now it was closer to the hour side, right? So if interest is piling up, plus again, I know I already stated this, but BlackRock invested prior into September, October timeframe, all that stuff. You can see more interest coming in, which is awesome, because clearly people are seeing something, right? Now, obviously, like you have your own opinion on the company, all that stuff, in terms of you think it's awesome and all that stuff, let's just say, or if you think it's negative. But if you see the analyst side coming on board, plus major investors coming on board, then there must be something good, right? Hopefully, right? Not a guarantee, obviously. Now, for the Q&A, was asked basically what you plan to do with the extra capital coming in. Again, like I said, that's an awesome question. And even John G. Mateo stated that was awesome being asked about, because prior times that wasn't really a concern because that was not even on the table. And in essence, they said, yes, they'll look to strengthen the balance sheet, but in general, short term, more so to look to drive in more revenue growth, and long term, down the line, mergers and acquisitions possibly, and possibly share buyback given the share price is low. So John Giamateo himself stated that was low. And during that time, the share price was roughly about $3.02, $3.04 US during that time, during the earnings conference call. Was asked about the silence tax loss as well, which I've stated in one of my videos too. The tax loss, so when they sold this, when they're selling BlackBerry Silence to Arctic Wolf and somewhat of a partnership, one of the agreements was they keep the patents, which is awesome. BlackBerry keeps the patents, very beneficial because they could collect royalties on that or even sell them, etc., etc. And also they get to keep the tax losses, which is quite substantial what I was assessing. But Tim, CFO of BlackBerry, also confirmed himself, essentially, it was well into 100 million. So was asked about the tax losses that they get to keep, and Tim, CFO, said it's well in the hundreds of millions. This again is awesome in my opinion from the deal, because like I explained last time, when the company makes profits like it did this quarter, it will for now not pay taxes on the profits. Not necessarily not for now, but these profits, they're good. They get to keep them just because they've already essentially minus them from the losses. So basically I say right here, so make profits like they did this quarter. It'll for now not pay taxes on the profits since they can write them against past losses they reported / had. So more money in their pockets to invest in the company moving forward, which is pretty awesome. And then so for closing remarks, they said they will be at CES this year. CES is in January, and so coming up really soon. And as well as they invited people to stop by their booth. So they have a booth and they invited everybody to come there. So in my opinion, everything seems to be doing pretty well with this new management team. Again, we came to profitability a quarter sooner. I'm going to go over the technicals in a few minutes, but just basically want to wrap up in terms of my opinions for the earnings. It's pretty good. The only thing is the downfall, I would say, is in terms of forecast, low numbers, which is kind of unfortunate, but it's kind of expected though, because if you have the silence revenue being taken out, then obviously the numbers have to be adjusted lower, right? Because that revenue has to come from somewhere. And if the revenue expectations in terms of outlook was relatively the same, then the other portions of the divisions or the divisions themselves have to step up the game quite substantially. And that wouldn't be that case that quickly, potentially. But there's that. So overall, it's great. At least we're seeing profits, and the company's moving. The management team is doing great, in my opinion. But I've said that too many times, I think. I apologize for that. So now in terms of the share price, the reason why I think there's more upside and the volume, I want to go over the volume first. You can see the volume has slightly, not necessarily slightly, it has increased substantially actually. But the thing is though, if you look at the volume ticks, you can see the thicker it is and all that stuff, and the higher it is, the more volume is coming in. And if you look back where it was I believe it was December 4th of 2020. So December 4th of 2020 or December 3rd, it's showing here December 3rd, but I think it was December 4th. Amazon or BlackBerry announced BlackBerry Ivy, which was a 50-50 partnership with Amazon. And that volume is way higher than we see right now. And that was the first spike up, right? Then we came back down and we saw the GameStop first run up back in January, massive volume. Now that's expected. And then we saw the second GameStop run up, like GameStop, Wall Street Bets, all that stuff with BlackBerry and AMC. That's massive volume. We are nowhere near. Now you could say obviously the GameStop and Reddit and all stuff, those volumes were expected on the high side, and no way we would match that. And if we were matching that, we'd be flying way to the moon basically in essence, right? But from just the partnership announcement, that was quite substantial volume, and that was nothing to do with Wall Street Bets or anything. And if I remember correctly, the share price was roughly about $4.50 US and spiked up to $9 US, right? Again, the volume has increased. It's nice, but I just want to say that, like, essentially we're still somewhat in the early phases. That's just my opinion. Again, I do own shares in the company, so be very mindful of that while you're watching this video, but I still think we're in the early phases. We still have more room to grow, but there are resistance levels, right? Like I stated before in the past video, the resistance levels that we had to pass was pretty much in the it was the 350 range first, and then those 380 range, give or take, plus or minus a few cents, all that stuff, a couple of ranges. But now we've pretty much passed those, and like I stated, most likely in the beginning of the video, we've passed the 52-week moving average, or not 52-week moving average, but the 52-week high. So for the past 52 weeks, the highest we were, the share price was $3.85 US. Now we're at $3.96. So that is a big milestone in my opinion. And plus we've passed major moving averages, which I'm going to show. So 1 year chart, Here's the MACD line, indicates if it's a bearish or bullish movement. Currently in the bullish movement, and there's no real slowdown. So in my opinion, more upside to come. You could look at the volume. The volume has somewhat decreased, but yet the share price has still increased nonetheless, right? Here was like the first initial run up, but then still these lower volumes were still going up, right? But still on the buy side nonetheless, right? And then we passed all three moving averages, 50-day, 100-day, and 200-day moving average for the 1-year chart. Now, a 5-year chart, if you look at it, we've passed the 50-day and 100-day moving average. And then now we're heading to the 200-day moving average. Now, before we get there, though, there is obviously a little bit of resistance. So first, we have to break through the $4. I don't think that's going to be an issue. The next zone, which I shared in the other video, it's more accurate in the other video. So the video before this, it was somewhere between the 440 to 466 range, give or take, or 460 range, give or take, $4.60, $4.40 US. But once we pass that, I don't think it'll be much of an issue personally. What I mean by that is not necessarily, it could happen in the next few weeks, month, and all that stuff. But specifically, I'm saying moving forward to like Q4 and all that stuff, because I just want to assess it based off the numbers. Because if we have more volume coming in terms of buy side, that will accelerate things, obviously. But you can't necessarily bank on it, if that makes sense. But essentially, what I'm expecting to head over to is to the $5.60 to $5.85 range. And the reason why I'm getting at that, if you look at the 200-day moving average on the 5-year chart, you're looking at $5.62. So again, that's $5.62. That will cause us resistance. Now, this moving average does move day by day based off of obviously the share price as in terms of averages, but roughly about the $5.60 range. So that's going to be a resistance level for sure. Again, the 5-year chart is on the bullish side as well too. I forgot to cover that. So the 1-year chart, bullish movement, like I stated earlier, but the 5-year chart is also the MACD line in terms of the bullish side, not in the bear side. So that's good. So it's pointing to more upside. Plus, if you look at the 5-year chart, the volume is actually more accumulating to the buy side substantially. And then this is going to take time to load up. Basically, as the days go by, this will be accumulating more data, and it'll show us if the volume for the sell or the buy is increasing or decreasing, or maybe it would convert to the sells. I don't expect that to happen. I'm just stating that what could happen with the data, right? And if we look at the alt chart within the zones, it's looking at the 50-day moving average at the 579 and then the 695. But given that the 50-day moving average for the alt chart, again, this is also bullish for the MACD line, by the way. So the MACD line is on the bullish side, but for the 50-day moving average is about 579, it looks like, or no, sorry about that, 585. I was just looking at the data for my cursor, but if you look at the data right about here, once I zoom out, you can see it's at 585. So between 562, let's just say 560 to 585, give or take that ballpark, we are going to see resistance. Hopefully we break through it. That would be awesome. But I'm expecting that to potentially cause resistance until maybe by Q4. Again, it depends. The reason I'm saying maybe by Q4, if we have accumulation of a lot of volume coming in terms of buys, these resistance levels become less of a challenge to break through, if that makes sense, right? And then I'm expecting since that maybe about, let's say close to the $6 range, right? Because by 560, 585, and plus we start moving up, that moving average will move up as well. So it'll move closer to $6. So essentially that $6 range will probably be the hardest to break. And then we would need the Q4 numbers to essentially break through it, or some big news, right? Like for example, during CES, which is again in sometime in January, if they announce something major, that could give us enough volume to break through some levels. And then, for example, when the silence deal closes, maybe that might cause some awareness and excitement that more volume comes in, buy volume comes in as well. So who knows, right? Anything's possible. But that's basically what I wanted to share in terms of MACD lines pointing to the upside, bullish movement. That's awesome for the 1-year, 5-year, and all chart. And in terms of moving averages, a substantial amount of them have been passed. Plus, we broke through the 52-week high, which is awesome. So great movement overall, personally. Again, I'm excited, but again, I do own shares in the company. So just be mindful of that while watching this video. Not a professional, just sharing my opinion, sharing the information that I have, that I've seen and all stuff. And that's basically it. Thanks again for watching, though. I do appreciate it. Merry Christmas again. God bless. Take care, and peace, guys. Take care.